Welcome back. So the next macroeconomic concern we want to look at is inflation and deflation. Have you heard of the word inflation before? I believe so. Okay, so basically inflation is an increase in the overall price level of goods and services within a period of time. It's not the increase in the price of a good, but the overall price level of goods and services within a given period of time. And deflation is a decrease in the overall prices of the overall price level of goods and services within a given period of time. As I said, this is just an introduction to the macroeconomic concerns. Right. So, what are the components of a macroeconomy? A macroeconomy focuses on four major groups. So, to see the big picture, it is helpful to divide the participants in the economy into four broad groups. So we have the household, we have the firm, we have the government, and the rest of the world. So households, firms, the government, and the rest of the world for a macroeconomy. If you remember microeconomics, it's focused on only household and firms, if you do remember. Macroeconomics includes government and the rest of the world. Let's look at this diagram, which gives us a better understanding of the components of a macroeconomy, of the macroeconomy. So we have the firms here, we have the households here, we have the rest of the world here, and we have government here. Now this is how it works. Households receive income from firms, because when you go to firms, it is human beings that are working in the firms. So as they work, they receive income from firms. And in fact, households are the owners of factors of production. So labor, land, capital, entrepreneur, they are all owned by households. So they sell to the firm and the firm gives them income. When you sell your factors of production, labor will receive wage, capital will receive interest, entrepreneur will receive dividend and profit, and also land will receive rent. So it goes to the household. Now, what does the household do? The household will keep this money. When the firms produce goods and services, the households will use the money they received to purchase the goods and services from the firms. And also the firms, they don't just produce goods and services domestically, they produce goods and services to export, to sell to the rest of the world. So that also goes to the rest of the world. And household also, the income they receive, there are some goods and services that cannot be produced in the country, so the rest of the world also produces it, and the household imports it. That is how it works. Now, the government also takes some of these factors of production from the household. So when you go to government agencies, for instance, people are working there, they are supposed to be paid wages. Household, those who are unemployed in households, also in advanced countries, they are given some unemployment benefits. That is also transfer payment. So households receive some money or some income from the government. And for wages and salaries we receive and all other things, the household is supposed to pay tax to government. So household pay taxes to government. Firms also pay taxes to government from the profits they receive and from all their business activities. And government uses the money to buy goods and services from firms. So if government wants to construct a bridge, it must go to a construction firm and buy maybe iron rods, produce, and all other things. So that is how it works. It's called circular flow of payment, or sometimes circular flow of income in an economy. Thank you. We'll end here. I believe you enjoyed the lesson. I'll be standing by for your questions. I'm always glad to receive questions from students. Have a wonderful time. Bye-bye.